we go. The opinions and views expressed in this podcast are solely those of the Mortgage Dudes only, and not those of Equity Resources Incorporated or Greentree Mortgage Services. We're not crazy. Think of them as your slightly odd, yet occasionally hilarious uncles that are very knowledgeable about mortgages. I will say, together they have over 45 years of experience in the housing market, and that may or may not have included bourbon, beer, and cigars. They are here to enlighten and entertain, and we cannot be responsible for the language or jokes. So buckle up and be ready. Things are about to get interesting.
What does FHA stand for, Shane?
Well, a lot of people think it's like, was it First Home Association or something like that? It's just like it's a federal housing authority, and a lot of people think, yeah, is it administration or authority? Is it? I always say authority. I'm an idiot, so don't listen to me. Apparently, I'm a moron. Whatever. Hey, everybody! Welcome to Mortgage Dudes. I'm Shane Marzullo.
And I'm Ed Moloney from Cape Cod. Do you know what happened? May 1st came. Attitude of gratitude, my boat is in the water. So we got a little bit more energy today.
That's right. So, I forgot to ask you, but I was going to say, so it was in the water on the 1st. Clearly, it was, I remember you said it was kind of we texted you and you said it was kind of a crappy day, but you still got it in there. So let's see here. May 1st, it's 18, oh my clock, 16 days
May
later.
16th. I've been out 6 times on the boat. I've caught 20 striped bass already. The goal is 100 this year. I plan on breaking that goal in the next 2 months and to make it bigger because, I can work from anywhere. Yep. So
how does that work?
I heard your goal.
Oh, sorry. No, how does that work? Like, is there a limit you can catch on bass and all that stuff?
Yeah, striped bass has to be 28 to 31 inches to keep it. That's the limit. 28 to 31, it's our government. But back to you. I hear you're golfing today. Is that why you're wearing the pretty shirt?
I am. I'm my little skull and crossbones. Yeah, today's my golf league. My Thursday golf league is officially in, and this is our 3rd week. We actually had 1 week. We had a fourth week. We had to cancel 1 week because it was like 58 and high chance, 80% chance of rain. I'm like, I'm not golfing in this. I will not. I'm a fair weather golfer. If it's too cold, I'm not doing it. I'm just not doing it, man.
Well, that's like me, ice fish, and I will never ice fish. But back to the show. I don't know if many people know, but if you follow me and Shane individually on Facebook or our YouTube page, there should be a picture of the winner, Paul Zekas, at Disney wearing his shirt. And that shirt is pretty cool. So if anybody's interested in a shirt, Shane, tell them how they can enter to get a shirt.
Here's what you can do. You can hit the subscribe button to either the YouTube channel one, or if you're doing it if you're subscribing on like Spotify or iTunes or whatever format, if you subscribe, then just message us either on Facebook, send us an email at mortgagedudes@callequity.net. However you need to do it, just let us know, and we'll get you entered. And we're giving them away weekly, so we got quite a few of them, and they're awesome. You know what? They're awesome shirts, and it will improve your wardrobe. Why not have one? So I know I've picked mine out. Have you picked yours out? Do you wear yours?
Oh, yeah, I've worn mine out there. Yeah, I've had people say, well, you just give me one. I'm like, no, you got to freaking subscribe.
Yeah, you got to work for it, man. This ain't a handouts. We're not the government. There's no handouts here. We work for a living.
Well, to segue to the government, let's talk about FHA.
Yeah.
What does FHA stand for, Shane?
Well, a lot of people think it's like, was it First Home Association or something like that? It's just like it's a federal housing authority, and a lot of people think, is it administration or authority? Is it? I always say authority. I'm an idiot, so don't listen to me. Apparently, I'm a moron. Whatever.
It's the insurance that they provide on loans.
Yep. So basically, what the whole thing is, a lot of people think, well, that's just a first-time home buyer loan, and that's not the case. A lot of people, it could be your 17th home, and you can go FHA. They are a great program. They allow a minimum of 3.5% down for people who maybe don't have the funds or low in funds. It is a good option for people with low money.
Another great part of the program is if you're out of bankruptcy 2 years and 1 day from your discharge, you get an FHA loan.
Yep.
In conventional, you can't. Also, conventional is very tight. 50 DTI, debt to income. We go over that with people if they want, and we've done it in other episodes. But with conventional, you can't go a penny over. With FHA, I've got loans approved 55, 56%. More forgiveness on credit. I mean, I've got people approved with 570 credit scores. I'm not saying everyone with a 570 will get approved FHA. I am saying that we will work with you, and the hit to rate for FHA isn't there compared to conventional. Well, what do you mean, Ed? If you have a certain credit score in conventional, you get a certain rate or lower. So if you had a 620 credit score, we were able to get you conventional, your rate would go ba-boom. But FHA, it doesn't go as ba-boom. And that's very important. So the misconceptions on FHA are they're just first-time home buyers. They're not. And there is private mortgage insurance. Talk about how the government does get them both ways with PMI, please.
So with FHA, there's two types of PMI. There's your upfront PMI, which is a percentage of the loan amount they finance in. They charge you, let's just say it's $1,000. They charge you, and then they add that $1,000 to the loan size, so it's financed in, so you're not bringing that money. But then there's also the monthly PMI. Now, well, a lot of people under the misconception, the PMI for FHA is for the life of the loan. Yes and no. It is if you put less than 10% down, okay, then you're going to be paying the PMI for the life of the loan. If you put 10% or greater, even 20%, believe it or not, then it is for for 11 years. Now, how do you get rid of MI? It's real simple. Refinance. Pay off the home. That's the only way to really get rid of it on an FHA loan. Again, this is assuming you're over the 11 year or didn't put 10% down. Now, people go, well, why would I do FHA and I'm putting 20% down? Well, what if you don't qualify for? What if you had that bankruptcy and it was 3 years out? Conventional requires 4 years. Or what if you had a foreclosure and it didn't? There's something. What if your credit score wasn't there for a conventional loan and yet you were still had 20% put down? It's sometimes you have to take a step back, take the hit to get the home. Then and that gives you that time, maybe a year, maybe 2 years, to get back on your feet, have everything going good, and then refinance. Refinance at a better rate. Get rid of the PMI. Save money that way. That's a great option.
And a quick historic point, we go back to me and Shane have been in this forever, but in 2009, after the 2008 crunch, FHA was the only thing, because if you didn't have a 700 credit score and 10% down, there was no regular private mortgage insurance. It went away because an oxymoron, private mortgage insurance is done by public companies, where FHA is government. So there's a lot of good pieces. The last piece I'd like to talk on FHA is the misconception of realtors. The big thing on FHA is paint chips and maybe railings and stuff like that. The reality is, a lot of times the buyer and seller agree to have that maybe worked on before the actual appraisal, and they're minor. It's our job of working with a top mortgage professional that can educate them, because this is a real loan for real people in our lives. People file bankruptcy. They get bad divorces. They have health issues. Stuff or shit happens. Oops, I'm going to get you lit up for that. But the reality is FHA is a great solution. In the past, we've talked about VA. On our next episode, we're going to talk more in depth on VA. We're going to dive into fishing versus golf. So we all know Farmer Ed, Fisherman Ed, Mortgage Ed loves to fish. I was fishing this morning right after horse poop. It was raining. Didn't bother me. We got a fair weather golfer. So my assumption is Shane's out there with his big muscles, hitting the club. I want to hear how good of a golfer he is compared to Brian or others. And I want to know, do you always or often smoke a cigar on the golf course? Take it from here, baby.
Yeah, there you go. So, golf-wise, I'm an average golfer. I probably have around a 10 handicap, which basically means it's 10 handicap. I shoot anywhere. It depends. I can go and shoot lights out and shoot a 36 on the front nine and go and shoot a 54 on the back nine. It's where the wagon wheels fall right off. I've actually played with a group of guys. I shot I shot a 49 on the front nine, and I ended up shooting par on the back nine. I'm like, I don't know.
You're a little erratic.
Yeah, I was
You're
inconsistent.
a little erratic.
But as far as cigars, I love cigars. I smoke, 1 to 3 a day. It's just, I love cigars.
You got Farmer Ed beat. I do about 6 a week.
But I do not smoke cigars when I golf. And people are like, I can't believe that. And the reason is, cigars relax me. I enjoy my cigar. I relax. And a lot of times I don't even have bourbon with it. I just have water. And when I'm golfing, it relaxes me too much. And golfing is supposed to be a relaxing sport. But I laugh. I pay to get pissed off. I literally pay money to get pissed off. And there's sometimes I just want to Hulk smash crap and just like. And I'm older now, so obviously I don't snap. I don't throw my clubs as much as I did. There might be one or times, yeah. Or I'm not saying I have or have not snapped a club or two in my life out of anger, but it's funny that I'm like, I do pay money to get pissed off, but I'm also realistic things, like I'm not, like I said, I'm a fair weather golfer. I'm not doing that. I'm like, even like when I'm weightlifting and all that stuff, you got some people are like, I'm going to throw like 250 pounds over my head. And I'm like, no, I'm not doing that. I'm too old for that crap. I don't need that. That's a young man's game. I'm not doing that. So
we know where we're happy. We know what makes sense. And I love what you said, because everybody knows I love my beer. I love my hazies. I never, ever, ever drink on my boat. Now, Shane could come on my boat. Brian could come on my boat. Anybody could drink on my boat. You ask me once for beer, Ed, will you have a beer? I'm going to say no. Remember what I said. Yep. Second time, I'm going to get a little bit more angry and show you the side of the boat. Third, you might be hung from a rope, your feet, and dragged back in. I never drink on the boat. People are like, but you drink at restaurants, blah, blah. I made a decision 9 years ago when I got my boat never to drink on it. I very rarely smoke a cigar because I'm running the boat, I'm running around. Now, if I'm on a charter boat and there's a captain and I'm out at 6:30 in the morning, the first beer could well be cracked well before noon. The first 2 cigars are had. Usually the trips go from 6 a.m. to 2, so you can imagine. But it's funny how what we do and what we do differently. It's the same thing in life. We have been doing this long enough. We've seen people come and leave this business, come in, out, refi booms. We've kept our licenses. We stuck with it. That's why we know FHA. That's why we care about our clients. That's why when we did this podcast, a lot of people are like, that's not going to really help. Some people aren't going to like you. Guess what? At the end of the day, if I help somebody and they like me or not, because maybe somebody here is watching this in California, and guess what? We can't help you in California. But if we just helped you by being here, I feel better. I know it sounds corny, but at 52 years old, I don't have, another 80 years left. So I got to
Sorry about your luck. I do. I've told my wife after 100 years of marriage, I am dumping her ass and going with some young hot bride. She's like, "Oh, you're not going to live that long." I'll go, "Oh, I will do it out of spite. I will live that long strictly out of spite." So, but yeah.
All I'll say is that many people in administration in both our companies will agree with that comment.
I will say, you bring up a good point. Ed and I have been doing this for a long time, and it's important for people to pick the right loan officer, or pick the right realtor, and I think with that, it's really about, because we do care, we truly do care. There are loan officers that in the crash that got out of the industry, and realtors that got out of the industry. They might have held their license in escrow, meaning they might come back, but right now I'm just gonna do something else. Well, that basically means that they just weren't doing their job and making money, or ripping people off, so they decided to go do some hourly job or somewhere. And the problem is when the market started coming back, ergo, some of the crappy people did. And I think it's very important to tell people, you got to find someone you're comfortable with. I think I'm a big spidey sense guy. And if someone's saying stuff to you and you're like, I don't know if I like that. Or I don't know if I that doesn't sound right. Or just, if something's just hitting that gut of yours, it's probably right. Get the hell away from them.
Two quick points on that. Me and my team call that the smell test. When we're looking at a file, we're doing anything, it's the smell test. This doesn't smell right. Let's ask another question. Let's get the heads together. And that's the thing, that if I ever have an issue, I'm reaching out to an expert like Shane going, hey, I'm thinking this, Ed, because he can look at it from a different view, even with his different eyes. And he can make it in a different view. And the other thing is, of the people coming in and out of the industry, you have to be a student of this industry. You have to be. Why? The rules and regulations change. FHA's changed more times that they say they're going to change, then do. Conventional, we've got variable income rules, we've got self-employment rules. They changed during COVID, then changed again. The point is, work with an expert. You want to ask a realtor or a mortgage person, do you do this full time? No, I sell houses on the weekends and I'm a teacher. Well, what if you've got to have a deal negotiated during school hours? Probably not your best bet, even if they're your family friend. Get somebody doing it full time. How do you interview a good realtor? You ask them, tell me how you negotiate better than others. Tell me how you've made your first-time buyers feel good after looking at houses for 12 months and not getting one.
Yeah.
Show me what you do differently. And you should interview 2 or 3 realtors. I'm fine with that. A lot of realtors mortgage people will say to realtors, just give my name. I'm like, no, give 2. Always give 2. I'm good with you giving 2. And why? Because I believe that they give the Bank of America, the TD Bank, I'm probably going to get lit up, the local credit union, and me. I'm going to bring more value. And if I'm not, then power to it. But find out that the person's a personality match, as Shane said. As I'm saying, make sure the person's knowledgeable. Well, Ed, how do you find out more? Online reviews, but some are canned. Let's be honest, you can buy services. But if you read my online reviews, you're going to know they're real people.
Well, and you got to look at those reviews too, though, Ed. You got to look at those reviews. You got to look at those reviews too, because some of those people, the reviews are like 3 or 4 years old, or or it's their mom or brothers or sisters.
Oh, agreed. That's why they have to read the words.
Yeah, I mean, truly look at what people are saying, not just like, oh, he's got 300 reviews. But if you look at what they're saying, and a lot of it is the same, it's almost the same old. Shane is great. His team is great. Ed is great. Oh, Brian is awesome. Brian does everything. Ed does nothing except fishes. Ed's just a talking head. He's like the Wizard of Oz. And no one has ever seen Ed. Whatever. But I mean, it's again. I think you hit that the nail on the head there. It is important to have that person that's in your backside. And it's funny, is like when you said about, hey, I tell them to give them 2 people. Agents will say like, well, I have to I give them a couple. I'm like, good, give them my name. And then there's another really, really good loan officer. She's just as good as me, almost. Her name is Janelle Marzullo. And, so we do laugh because we always say, sometimes, believe it or not, sometimes people are not a fit with me and my personality.
Shocking.
I've not seen that, but my wife says that. So it's got to be true because she said
I met your wife, and she is a saint. And the build up of this is knowing your shit. And we do know our shit. So we're going to talk about non-owner occupant co-borrowers. Then we're going into multifamilies versus owner occupied. So let's talk about non-occupant co-owners, co-borrowers. So babbled like you. But here's the point. I'm going to give an example. Johnny and Michelle are applying for a loan. Michelle says, is a deadbeat. He has not filed his taxes in 5 years. We cannot use his income. But Johnny makes $100,000 a year. Michelle only makes X a year. Michelle wants Johnny dead. So instead, we say to Michelle, don't go to prison. You want a house? Yes. Do you have a mother, brother, sister, uncle, cousin that like you? They don't have to live in Ohio where you live. They can live in Massachusetts with a lobster, or in Florida, or wherever else. They need decent credit. They need good income, low debt. What is this craphead? They own the house with you, but they don't live there. We're basically borrowing their credit and income to qualify you. We don't want to do that if you can't make your mortgage payment. We want to do it in the example of Johnny, who Michelle wants to strangle because he has not done his taxes, or because his credit score is a 400, but they can afford the house. Or another example is Mary dog sits. Well, that's all cash. She could eat, but she also makes X. The other thing that I've seen with the co-borrower is a parent, and some parents are going to want to kill me, so get ready. Johnny's going to college. Johnny makes zero, or $10 a week. Johnny could be the primary borrower on the home, and the co-borrower, not owner-occupied, not living in it, owning it with you, they're on it. We can use all their income. So we've seen this. This used to be called many years ago kiddie condos. Somebody would go off to college. Johnny would go on the loan, primary. They could use FHA. They could use conventional, lower money down. And that's a great option. I'm going to let you add to that. Now I want you to talk about multifamilies.
Yeah, so on that, you hit the nail on the head there. Let's say Johnny's becoming a RN, okay? Maybe he's just got his license and is able to work now and get paid good money as an RN, but because of maybe fluctuating income rules or however those things, we can't count his income. But mom's income is fine. Mom can co-sign for them, and then you know what? And after a year, let's say Johnny wants to say, hey, I want to get my mom off the loan. Great. We'll just refinance.
Assuming that the market allows us to, and Johnny's done his job, but if not, him and mom have been fully educated by us or the professional of the risks.
And that is a good point, because a lot of people don't bring that up. I'm like, because I have people like, well, what if they don't pay? I'm like, well, then it's going to mark up on your credit. It's like co-signing for a car loan. The difference is this is a major thing, So it's important that everybody's aware of, like, yes, you are equally responsible. And if that means mom's like, well, I want to have a separate account where he puts money in and my name's on it as well, so she can make sure those payments are being made, that's fine. Now maybe mom is not like, maybe mom is more forgiving than my mom is. My mom's like, I love you. You're an idiot. I'll never co-sign for you. Okay.
And there's a lot of parents like that. To end on this, it's not just about the mortgage. So you're buying this with your aunt. Aunt Sally, you love her. She's got great credit. She trusts you. You're going to pay the mortgage. But Aunt Sally's married to Uncle Fred, and you don't like Uncle Fred. He's the inherited uncle. He's a bad uncle. So Auntie dies, you can own the house with Uncle Fred unless you do some kind of legal document with Auntie. We're not just about the mortgage. We're not just about selling loans. We're about doing the right thing for our clients. Shane, we're coming up on the end.
Yeah.
I want to talk about multifamilies and then parting shots. You got it, my friend.
All right. So multifamily, what that basically means is a home that has more than one living area. And I say living area like you have your home, and then you have another unit that someone else lives in, like your apartment or a duplex or a triplex or a quad. So a great thing that Fannie Mae and Freddie Mac did is said, hey, look, if you're wanting to buy a multi-unit, and and they changed I think last year they did this.
About 13 months ago, 11 months ago.
They said, hey, you can now get away with putting just 5% down if it's your primary residence. Because before they wanted, 15, 20%, I think.
And 15 for one, 20 for two before.
Yep. Yeah, so this makes it great. And people are like, well, why would I want to do that? Well, it's real simple. One, multi-units don't sell as fast as regular homes, as a single-family home. So you're able to get into this. Maybe you can still fix up your side and live, to be beautiful and live in it, and then have somebody else living in the other unit or units, and they're paying rent. Well, that rent is paying either all or half or a portion of your mortgage. So you're essentially, if your house payment's $1,000 and they're paying you $500, you're paying $500 a month just for ownership of something. Which is cheaper and better than rent. So now you have ownership, and if you sell this thing, you have all this equity, and you still didn't put much into it because they've been paying your rent for you. Or if you said, you know what, I'm going to move on. It's 2 years. I met a beautiful woman in my life. I'm on to the next chapter of my life. We're going to buy a bigger home. Then you keep that house and rent, and now you have an investment property. They're not changing the rate. They're not going to go, now it's not living. No, but if your intention was to live there and get that rent, have someone pay your house payment and make it comfortable, make it nice. That's where the benefit is. And I think that's where sometimes people are missing the boat, because right now in this market, we got our horse blinders on, and we're just looking at single family. Nope. They want $20,000 more in cash. Okay. Nope. This one had 30,000 offers and I can't buy it. Look at those options for you. Have your realtor look into them for you.
I'm 100% in agreement with Shane on this. So first, we could do 4 units and under. If it's over 4 units, it's not a residential loan. It's a different game. Yep. 2, FHA, still, you can do multifamilies with that. The nice thing with conventional is you don't have the upfront and the other PMI. There are times where FHA might make sense versus the 5% down. Why, Ed? The rate on FHA is going to be lower in most cases than conventional. So you need an expert to look at all the pros and cons. Mm-hmm. Also, all we hear throughout the world in the news is the haves and have-nots. The biggest way to build wealth is home ownership. Period. People that rent versus people that own, historically, you have more wealth. It is so hard with that big word called inflation. Thank you, my government. Both sides. Bring the wig party back from the 1800s. That's what we should do. Next time, we should wear wigs. I think that'd be beautiful. Especially with an election coming up. Put the wigs on. But back to the point is a multifamily, especially now that people can work from home. So you might be able to go to an area that is cheaper than where you would have to be to get to Columbus, Ohio, or to Boston or Worcester, Mass. You had to be close because you didn't want to drive 3 hours.
Nope.
Now you might be able to go to a rural or a Toledo type area and have more affordable than Columbus. And because you're working from home, only going in 1 day a week, there's so much to do. I love what Shane said, intent. If your intent is to live there, you lived there for so many years, now maybe you are moving close to Columbus. Ed, would that stop you from buying a 2-family in Columbus? Very likely no. But your situation is going to be unique, and we'd have to look at that. I think we're on to parting shots, and I'm giving you the first one.
It's real simple. It's summer. Everybody needs to enjoy themselves. It's the housing season. The housing season is building up. So call us, question us, ask us out everything. We're here to help you. If you need a wonderful, awesome T-shirt to improve your wardrobe, you know what to do. Subscribe. Let us know you subscribed. We'll put you in the little lottery. And boom, you could win a beautiful, beautiful T-shirt by Ed and Shane.
My parting shot is simply this. Fear is everywhere. Fear is overwhelming our world. There's a lot of uncertainty. Get past fear, and with time and a plan, anyone can achieve homeownership. Yes, once I had a friend say, "You're stupid, Ed. Your 13-year-old son cannot buy a house." I said, "No, you don't listen with these things called ears. Time and a plan." So if you've had a bankruptcy, if you've had a bad divorce, if your credit sucks, if you've gone self-employed to employed, whatever, time and a plan. But what does it all start with? This thing. Hello, Shane. Hello, Ed. Oh, I'm in Albuquerque, New Mexico. Hold on, let us see through LinkedIn, Facebook, who we know. We can still educate you. I cannot quote a rate. I am not licensed in that state. Doesn't mean I can't provide you free education and then find you someone. Well, Ed, you're going to do that because you're going to make money. No, us mortgage people cannot get a referral fee. The realtors can. They can refer you, but they'll do their work. They'll research people. That's my parting shot. Till next week, and I hope to catch 20 stripers. Bye-bye. Thanks, Shane.
See you, buddy.